So the bond market.
Okay. So I'll go ahead and record it. Guys, so this is July 13th. So we're going to talk tonight about the housing market crash real quick, and then we'll post this on YouTube. So as you guys, everybody that's kind of watching, if you're not participating, you can still watch on YouTube. The housing market is definitely going to crash. It is doing it now. So I would expect that Michael Burry from the Big Shorts probably already got some shorts going on some mortgage companies. We're going to see a collapse of a lot of mortgage companies over the next weeks to months to year. This is going to be devastating. It's going to be, so you want to get ready for it, either whether you're a homeowner now and what happens when you get into trouble. It's a good time to start looking at your mortgage, your finances, and start figuring out if you can do refis and stuff, because you may not be able to do them in a couple months. So if you're going to do them now. So I definitely talk to your mortgage company, talk to your bank, things like that. Get some things paid off if you can do a cash out refi and get some money out, pay some other things off. I would do it now because you're not going to be able to do it, and I'd say probably by the end of the year. So we're looking right now. I saw something on CNBC, and Kevin earlier sent me over some data that I posted in the OPM show in the group. So that's facebook.com/group/OPM show. So you can just go there and see the detailed information. I'll try to go through it and get a better update for it in a couple of days, and I'll have Kevin real quick talk about what he's seen. But I just saw on CNBC that mortgage applications in the last 2 weeks has gone down about 4% from the previous week. So that's pretty significant. 4%, and that is like, I don't know, hundreds of thousands probably of mortgages. So that's significant. We're seeing inflation at 9.1%. We're seeing fuel prices 180%. Just where I'm at in Evergreen, Colorado, we're paying $4.79 for unleaded, which is pretty ridiculous, and like almost $7 for diesel fuel. So bad that some people are actually stealing diesel fuel from construction vehicles. They just had a good bust where somebody actually stole like 2,000 gallons. So we want to talk a little bit about that, but if you guys are in the real estate investing industry, a good time to work with us and all that. We are still launching an engagement with an investment bank, and we'll be raising significant money for our real estate program with our members. That'll be happening over the next 4 to 6 months. It takes about 3.5 to 4 months for them to do it. And then we're also heavily, you can on Tuesday nights you can talk to us about Osmium. You can talk to us about Osmium anytime. All three of us are prominent players in the Osmium world, and then also strategic metals and critical metals. But right now, the housing market is. If you want to get into it, you need to go to my YouTube. Go to the YouTube channel. You can find the videos on it. We're still about 27 subscribers from having which is crazy. Then we a lot of people to a group and I'll put stuff in there. A couple of years ago, couple classes, and we had rules for tracking, and we had a broker's class and a couple different PowerPoints. I won't be posting those in there, but we'll be doing a special program with those because we have to actually teach people. If we put it in there, it's hard for people just to do self-study on their own. So we'll be doing a program. It'll be a paid program because it's time for us to do it. Kevin and I had a start. You guys can find it. It's a $7 multifamily portfolio in about a year and a half during the pandemic, so which is pretty incredible. And also as a lending company, we have 1,341 lenders in the database in the files tab section. So you have all the resources. Another resource that we have recommend as a paid program is it's about just under $1,000 is Privy. So you go to getprivynow.com, hook up with Benson. If you tell him me and Kevin and Jay, he'll hook you up with the deal. It's the best program you can get into. So you don't have to deal with wholesalers. Don't deal with wholesalers because they're going to, go get some on-market deals and work with Privy, work with our lenders and work with us because you'll be able to actually get a better deal. If you want virtual wholesale, like if you need to save up $100,000, $200,000 or whatever for your down payments and your reserves, you can virtually wholesale and make decent without gouging people in their houses, and like a lot of wholesalers do. The we buy ugly houses people are wholesalers. They're not they're not in it for the best interest of the homeowner. So that Kevin, what are some things you're seeing or hearing about? You
Well,
know, you're talking about gym records and all that.
the May housing starts for new houses went up significantly, but the June housing starts and the applications for permits has fallen off a cliff about the same time as the mortgage rates going up and the mortgage applications dropping. We're not going to see a large scale drop in value for housing prices. Okay, that's not going to happen. What's going to happen is we're going to be in a dead zone. People aren't going to be able to afford the houses, not just because they're higher, but because they can't afford the payments due to the increased rates. They're not used to this at all. This market wasn't made to have this happen. We've only went through this one other time. It was back in the 70s, and I do recall that, and it was a mess, but nothing like what's getting ready to happen. So multifamily, when you talk about rents, they're going up because there's still a lot of demand for that because the housing market itself isn't fulfilling enough units to be able to put people in there. So there's a backlog. The other thing is when Nate was talking about, getting your affairs in order, there haven't been that many refi applications either. And the reason being is if you're not already set up in a steady mortgage, if you're set up in an ARM, it's too late for you. That's just all there is to it. If you've got a fixed rate mortgage, stay with what you got because it's not going to get any better. The Fed's going to come out with a 3/4 point bump again in another week and a half, and they've already started their quantitative tightening or reversing the quantitative easing that they were doing. That entails the treasuries and mortgage-backed securities, which immediately directly affect what's going on in the housing market as far as rates are concerned. So it's going to be an absolute mess. You can expect probably 3 to 5 years before it actually tones out. That doesn't mean, again, like Nate's saying, that you're going to get completely wiped out or you're going to be bad spotted or you won't be able to do anything at all. Between Privy and the mortgage-backed securities going out on sale, you can buy mortgage notes. They're going to come up a lot. At the same time, you can go ahead and wholesale your stuff through Privy and be able to do good there. And if you are going to go ahead and do fix and flips, material costs are coming down. There's going to be some available labor that won't be, it's kind of breaking free because the new housings aren't working as much. So that's going to help a little bit. But what you're going to want to do is you're going to want to go ahead and hold paper on that. In other words, find a buyer, get them in there, and you take a mortgage note. It's safer that way. And if you got other people that are going to have all these arms that are going to get into trouble because the adjustable rates keep going up and up and up, and they can't afford the payments anymore, you can come in, take those over, buy those notes, and again, allow these people to start paying rent instead of kicking them out. A year or two later, when things start leveling off and they can start getting things straightened out, then you can go ahead and resubmit another mortgage for them. Either you can do it or you can have somebody else refi through some of the people that Nate and I are talking about regarding having references to cash and lenders. But that's about the only way it's going to play. Multifamily, great place to be if you're in it now. If you're not, wait. Because it's going to take instead of taking about 7 to 10 years, it's going to take 14 to 16 years to run the program. And there's too many variables that can happen. The mortgage rates for those are going up as well. So your numbers aren't going to be as stable as you would like them to be able to get into that kind of thing. As far as commercial is concerned, really, really look at the situation with the, self-storage, boat storage, that kind of thing. You can't lose with that. And it's going to become just like the housing. It's going to become a high demand deal because people need a place to put their stuff. And if they can't make the payment, so what? You can sell the stuff. You go on and get somebody else into the next month. You're not losing. And it's very easy to get into. It's a low-cost venture to get into with very little risk. That's basically the essence of where we're going with this thing regarding real estate as a whole at this point in time. And this is something we're going to probably look at in about 2, 3, 4 years. And then each year we're going to end up updating it as it goes. for the near term, the next 2 years, we'll be updating it about every 3 months. It's going to go that fast. So we want to try to stay 3 to 6 months ahead of the market so that you can plan your moves ahead of time, be in a position to do something when the time comes. We're not going to play real. We're not going to be real time. A lot of people are either real time or they're behind time. We want to stay out ahead of this thing. So as more opportunities come up, as shifts start happening, we'll be able to get in touch and let you guys know what's going on. I do have a large library. I'm trying to convert, get Nate involved with that and get him set up with this so that he can look at the stuff as it comes in. It's become an 8-hour day looking through all the intelligence information. It used to be 40 minutes. And this is geopolitical. This is market stuff. I'm not talking about stock markets. I'm talking commodities, tangible asset markets. And the geopolitical situation with China and Russia is becoming very, very hot. It's not going to cool down. And I hate to say this, but we may be looking at World War III in the next 6 to 8 months. That's when all bets are off. I mean, we've got about as close to all bets are off up to this point as you can get. When that happens, you don't know where we're going to end up because it's just everybody's in a power play right now, and they do have the chips to play. Unlike times before, yeah, we're going to end up in a bad way before this is all said and done. It's not going to be hands off the United States.
Okay.
So,
so I'm running a few audio difficulties. Okay. So guys, like I said, we're going to be doing this like every week again. Wednesday nights, for which I fixed a few audio difficulties we're still having with connections and stuff. Obviously, Jesse's in Massachusetts, Kevin's in Kansas City, and I'm in Denver, so we're kind of spread out. But just to let you guys know, so this will be on YouTube, and you can go to the YouTube channel. You can just see the links to the videos that are in OPM Show. So facebook.com/group/OPM Show. We are actually, we talked about our engagement with the investment bank. Well, obviously, we're not going to get into that too much, but we are doing $1 billion raise with $300 million for our real estate program, $300 million for Osmium, which we'll talk about on Tuesday nights. You can go to the Osmium Investors group. It's just Osmium Investors instead of OPM Show. And about $400 million will be going into what we call strategic metals and critical minerals. The U.S. Department of Defense, Department of Energy have executive orders. They are in demand. A lot of stuff that goes into medical imaging, goes into defense, aerospace, windmills, renewable energy, things like that. A lot of stuff that is so critical that both, it's probably the only thing that President Trump and President Biden agree on, because they both wrote executive orders on it. So we're going to be doing a lot of that. A lot of mining stuff. We are physical and we don't want to do anything on paper. We have right now is I'm probably the last few months where I'm talking to people. Guys can talk about more about, but this housing crash is going to be extensive and severe. So you want to be prepared for it as a homeowner. Like we were saying to begin with at the beginning of the video, talk to your bank, talk to your mortgage company. Don't take changes, talk to them first. And definitely if you have a fixed rate, you're good. Don't try to switch anything unless, literally pay off things, because a lot of other stuff's going to crash. Automobiles are still screwed. You guys need to talk to us about automobiles. Guys who don't know us, Kevin's family is biggest automotive in Colorado. So he has a lot of background in automotive, and it's definitely going to be affected. Electric vehicles, it's like they kind of sold us a bill of goods on them. Things like that, the oil industry, it's going to be affected. Inflation. Just remember in November, not to get political, but when you go to the polls, pass at least 3 or 4 year gas stations, and that might change your vote. Just remember what's going on right now is everything's expensive. You go to the store, literally the Dollar Tree became the tree. Let's see some other ones. I get this stuff called Body Armor, which is like Gatorade, and it was $1 just about 3 weeks ago, and it's $1.25 now. And there's I've seen some other stuff go up in price just at the grocery store that I go to. So a lot of stuff's going up. Guinness went from $5 to $5.75 at the bar I go to. So it's not a big increase, but you know. So everything's going up right now, but housing's going to crash, and we have a lot of gurus and experts, real gurus, not the guys with Lamborghinis and the G5s and their dreams. We have real gurus. We can hook you up. Like I said, join our Facebook group, Facebook.com/OPM show. Like, share, and subscribe our YouTube. I know that it's hard without the URL until we have 100 members, 100 subscribers. But when we get 100 subscribers, I'm going to also give away $100 in osmium. And then also, we're selling osmium. We'll talk about this. If we can sell $3 million worth of osmium by the end of the year, I'm going to donate $30,000 to St. Jude's Children's Hospital. So let's push that and let's get that going. So $3 million of osmium, we can get $30,000 to St. Jude's to help some children and stuff. So with that, guys, I know we're having some technical issues with connection. So unless you guys are, Kevin and Jesse, are you guys able to shed any light on anything before I log off?
No, I think we've about covered it on my end as far as the intelligence stuff. Just next week, by the time we get done, not to mention working on these technical issues, but Nate should have pretty much access to the entire library that I have regarding intelligence. I'm hoping we can kind of split the duties up looking this stuff up because it's really ridiculous as far as how much volume is being pumped out there right now. And these are all from serious experts. David Stockman, President Reagan's former Treasury Secretary, is one of these people. Jim Rickards is another one. And there's just a whole host of people that have been at this a long time, actually have proven track records. They're not blowing a bunch of air. And they've all been saying the same thing. And to a certain extent, it's actually exceeded some of their expectations. So they're a little tense right now, too. So other than that, I look forward to seeing you next week.
Yeah, and you guys just mom. So if you guys actually want to see him, you can connect with him. You can actually do a video and show you his osmium, which is kind of cool. Like I said, if we can put $3 million out in the market by the end of the year, then I'll donate $30,000 to St. Jude's. So that's a pretty good incentive. So Jesse, Dad.
Oh, here to listen.
Okay. Yeah, it's a little bit using a Chromebook, so things aren't. It's amazing if you go to an iPad versus a laptop to the Chromebook, just how things look. So it's time to get used to the Chromebook. I got the better camera. I don't have to put the external and wear the headset. So we'll try to fix some things. Got a few minor technical things still to fix. So with that, everybody, I'm going to sign off, and I'll have this video up. And then if you guys feel free to just join the Facebook group, and you can contact any of us. I'll put I'll definitely so you can get in touch with the three of us. So with that, guys, everybody have a good night.